be with us on Asia Biz Forecast and our last program of the year. I'm Yuko Fukushima. Today we look at what's in store for Asian economies in the coming year. We have 3 expert guests, all from different parts of the region. Joining us from our studio in Singapore is Nick Harbinson of Tantalon Capital. Mr. Harbinson focuses on overseas markets and the Asia-Pacific region. Here in our Tokyo studio, we have Ronald Blon from Asian Capital Holdings. He's based in Hong Kong and has kindly taken time out from his trip to give us some perspective on China's economy. Also here in Tokyo is UBS Wealth Management's Fumio Nakakubo, who will be offering insight on Japan. Before we ask our guests to look into the crystal ball, we'll get everyone up to speed with a quick review of 2014. Let's start with China and a fundamental policy change. Leaders in Beijing have declared that Asia's largest economy is no longer content being the world's factory. They're pursuing a new growth model. They want to ease back on rapid expansion and focus instead on sustainable development. The Central Economic Work Conference is held in December every year. Top officials gather to work out economic policies for the upcoming year. The mood this year was wary. Noting the downturn in the global economy, leaders warned the country was heading for a further slowdown. China has been here before. Faced with the global financial crisis in 2008, the government launched a massive stimulus program. The government bankrolled domestic investment to replace the loss of exports, helping the economy to keep growing at a fast pace. But officials are now calling for a change in strategy. They say excessive investment has created a host of problems. That includes a mountain of debt, too many factories, and environmental damage. Changing course, policymakers have called for a, quote, new normal. They say this means an economy that grows at a slower pace focused on quality and efficiency. That will require fundamental reforms. Officials are promising to cut red tape, make state-owned enterprises more competitive, and allow private companies to offer more financial services. President Xi Jinping told the Congress his administration is now focused on long-term change. The new thinking was reflected in the economic agenda for 2015. Top of the list, sustainable economic growth. Well, timing of this announcement may not be a coincidence. The economy is expanding at its slowest pace in 5 years, as you see in the graph behind me. So, Ronaldson, looking at the announcements from the high-level Central Economic Work Conference, do you think the government is bracing for a downward trend in the economy?
Well, basically, the Chinese government is adopting a new normal strategies. Basically, it means that the Chinese government and the people need to accept a slower but sustainable growth in future. So I think that the future growth rate of China will slow down gradually to something like 7% in next year, or in the forthcoming next few years, the growth rate may even be slower to other, in something like starting with 6 point something or even lower. So at this point in time, I think that people need to be cautious and need to be prepared for structural changes in the Chinese economy in both terms of other area like export, trading, internal consumptions, or even fixed asset investment.
Means prepare for a slower economic growth.
Yes.
Okay. Now, next, Japan. Shinzo Abe's administration has spent 2 years trying to breathe life into the economy. After a promising start, growth stalled again this year, forcing Abe to postpone a tax hike. He called a snap election this month to get a fresh mandate for his policies. Voters handed his ruling coalition a 2/3 majority in the lower house. The Prime Minister went straight on message after the ballot count. He called the landslide victory a vote of confidence in Abenomics.
2 or 3 years ago, Japan was in crisis, reeling from a chain of bankruptcies, the excessive appreciation of the yen, and the hollowing out of Japanese industry. We have been able to greatly rectify this atmosphere.
Abe said the economy would remain the top priority for his administration. He said the next step was to extend the benefits across the country. Company managers don't seem to share that optimism. The Bank of Japan this week released its quarterly survey of business sentiment. The Tonkan survey polls more than 10,000 companies. The index for large manufacturers showed business confidence stood at 12 in December, down 1 point from the September poll. Looking ahead, they expect conditions in 3 months' time to worsen, down 3 points. The poll shows non-manufacturers and small businesses are even more worried. The concerns stem from rising costs for energy and raw materials. It's the flip side of the rapidly weakening yen promoted by Abenomics. One day after his election triumph, Abe chaired a meeting of government, business, and labor representatives. The prime minister called on business leaders to raise wages. He said more needs to be done to share the benefits of the weak yen. He also asked managers to pay more to their subcontractors. The three sides signed an agreement pledging to do their utmost to meet Abe's requests. The Japanese Prime Minister hopes to draw up a package of tax reforms and other economic measures by year-end. So, Nakakubo-san, the BOJ carried out additional easing measures, and the government delayed another tax hike under Abenomics. How do you evaluate 2014? Was it a good year for Japan?
If you really want to look at what's going on in the Japanese economy, you have to go back to Lehman shock. After the Lehman shock, the Japanese economy skydived and then rebounded dramatically. But soon after that, there was this big earthquake, and the Japanese economy became really bad again. And with reconstruction demand and the effect of Abenomics, the Japanese economy was slowly getting better and better. But then there was this VAT hike in April this year. And after that, the economy started to deteriorate once again. And we are now, technically speaking, in a recession with negative growth rates for the last 2 quarters.
Okay, Nakakubo-san, I'll get back to you. But now let's look at 2 other big hitters in Asia's economy, India and Indonesia. Voters in both countries chose new leaders this year. India's Prime Minister Narendra Modi took office in May, and Indonesian President Joko Widodo in October. They both promised reforms, structural changes to shake up their economies. Well, so far, the biggest shakeup has come from the oil market.
It's Make in India.
Modi hit the road soon after taking office, selling his idea to turn India into a global manufacturing hub. Tokyo was his first stop. Modi got a promise from the Japanese Prime Minister to double investment in India over the next 5 years. In the United States, he met President Barack Obama, who agreed to boost trade and investment. India's economy has been in the doldrums, with growth hovering around 5%, a respectable pace anywhere else, but slow for India. The recent fall in oil prices is a cheering development for policymakers, however. Oil accounts for about 1/3 of India's imports. Cheaper oil is already helping to keep inflation in check. In November, the rate of inflation fell more than 50% year-on-year. That should help the economy to expand at a faster pace next year. The IMF and the World Bank are forecasting 6.4% growth for the country in 2015. Indonesia is another oil importer, but it's also an oil producer, so lower crude prices come as a mixed blessing. President Joko Widodo cut energy subsidies last month, raising fuel prices by more than 30%. Falling oil prices help cushion the impact, but they have raised fears about a drop in government revenue. Indonesia's currency is another concern. The rupiah has tumbled to its lowest level since the Asian financial crisis in 1998. Investors have been pulling their money out of the country amid speculation the U.S. Federal Reserve will raise interest rates next year. That also led to declines in stock and currency markets in other emerging economies this week. Wild swings in oil prices, stock markets, and currencies. Asian policymakers have got plenty on their plate as they go into the new year. So, Nixon, declining crude oil prices could be a headache for Malaysia, but overall, how did the ASEAN economies do in the year 2014?
The ASEAN economies have had a pretty mixed year. Your report touches on 2 of the brighter spots, Indonesia and India. The one that you perhaps have missed out on, which has benefited most directly has been the Philippines, where underlying GDP growth continues to push along around 7%. But for most of ASEAN, really, I think the big event in 2014 has been coming to terms with the growing realization of what slower Chinese growth means for the region. And we are at the moment working through the first order effects of that, which are most clearly obvious in the collapse of in the collapse of commodities, both soft and hard. And on balance, this has come as a big negative for the region. It's not in Southeast Asia, but it's very pertinent to our discussion. Australia has been extremely badly hit, with the currency dropping from 110 to 81. Iron ore, copper, palm oil, obviously oil itself have come down hard, and this is having an impact on the broad region. So it's a pretty mixed picture, and my suspicion is that we have got a lot more to go in terms of realizing what the implications for the region of a decline in sustainable Chinese growth to a level which I think is much more likely to be in the 5 to 6% category than the 7 to 7.5% which the Chinese authorities continue to insist is going to be achieved. The implications for this are likely to be quite negative.
Okay, China's economy could be key. Okay, thank you, Nick-san. I'll hear more from you later. And now it's time to put our guests to the test. We're going to discuss what's ahead for the Asian economies in the year 2015, the year of the sheep in the Chinese zodiac. I want to continue the discussion on China because we heard a bit of a different view on China's economy for 2015. So Ronald-san, Nick-san said that China's economy could go down to 6 or 5%. Why? And you said around 7% next year. Why do you say that?
I think the situation in China has been really challenging. We've seen that Chinese government adopting structural reform, but somehow we've seen the growth rate of Chinese economy has dropped so fast. And there has been actually a U-turn in the policy in terms of liquidity. And also they relaxed the control on property market, which the people have not expected. They even cut the interest rate towards the end of the year. So it means that while adopting the structural reform policy, they still try to maintain the momentum to a certain degree. I think 7% for next year is actually the bottom line of the Chinese government. Of course, a range may be accepted as long as the economy and other prospect, other areas can be, the stability can be maintained.
And Nick-san, Ronald-san says around 7%. Can you give us your reason why you think it could go down to 6 or 5% for China's economy?
I basically don't believe the numbers that the government put out as the bottom line. And I think if you look at individual items of growth like rail freight loadings, electricity consumption, retail spending, fixed asset investment, they have all decelerated extremely sharply and are trading in most instances at 10 or 15-year lows. The housing market, certainly, they've taken off restrictions, but there's nearly 2 years' worth of unsold supply hanging over the property market. And it's by no means clear to me, with property prices now falling in China, that people are going to be prepared to come in to pick up what is, I think, very much a balloon that's been punctured. So I just don't believe the numbers. And I listen to what the Chinese government say, and I recognize that we're talking about very different levels of growth. But I think that from the point of view of the Asian region, whatever the published China number is, whether it's 5 or 7.5, clearly China is beginning to export deflation throughout the region, and that's a big negative for 2015.
I see. Now, Nakakubo-san,
yes.
What's the UBS's estimate for China's economy next year?
As Nick and Ron said, Chinese economy is experiencing very low growth rate for the last growth rate, which is the lowest in the last 20 years. So the Chinese government is now trying to boost the economy by lowering interest rates and at the same time going through structural reform. So the balance of reforms and economic recovery is very important going forward. And I think there are a couple of risk factors to the future Chinese economy. These are wealth management product and the real estate market. If something happens to each of these, either of these two, I think there's a scenario for the hard landing where we have the growth rate of below 4.5%. Although I don't think the probability of this happening is very low, as low as 10%. But I think we have to closely monitor the developments going forward.
I see. Okay, now let's move on to Japan's economy. Abenomics is the big talk of the street. But Nakakubo-san, how do you see 2015 evolving for Japan's economy?
I think the Japanese economy in 2015 is going to get better, get much better than now for a few reasons. First and foremost is there's no VAT hike anymore until year 2017. And secondly, there's as there is a regional election in April next year, I think Prime Minister Abe is going to put an emphasis on economic recovery, although he's going to put more emphasis on defense policy and constitutional amendment. And my third reason is that BOJ easing is likely in the first half of next year. I don't think there is a direct impact on the Japanese economy, but through higher stock prices and the weaker Japanese yen, I think it will benefit the Japanese economy going forward.
Now, Nick-san, I know you don't invest too much in Japan, but Nakakubo-san is pretty positive on Japan's economy. What's your take on the economy for 2015?
I see a dichotomy between the economy and the stock market, which I wrestle with. I think the stock market could continue to do relatively well in 2015, but I have increasing concerns about the impact of a weaker yen on the SME sector. I have increasing concerns about really what Abe-san's agenda is. It would be nice to see him devote his legislative time to the economic agenda, but I have this nagging suspicion he is, as Nakakubo-san alludes to, a great deal more interested in constitutional revision, Article 9, and revision of Japanese history than one would want to see in this circumstance. And in the meantime, Abe is doing something that really only President Putin has succeeded in doing elsewhere in the world, and that is systematically destroying the accumulated nest egg of the Japanese middle class by deflating the currency, to no obvious good effect at the moment in terms of consumption or indeed of higher wages. So I find Japan a bit of a puzzle for 2015, to be quite honest.
Thank you, Nick-san. Now, Ronald-san, Nick-san pointed out, and there's a big difference in the stock market and the real economy for Japan. From China's point of view, how do you look at Japan's economy?
I think people actually closely monitoring the Japanese economy, especially after the election, where the Japanese government will adopt another round of stimulating measures to gear up the economy. This first thing. Then the second part is that the future trend of Japanese yen. I know if it keeps on depreciating, I think Chinese renminbi may follow the trend as well. So it will actually have a very serious impact on the overall trade performance and things like that. Also, people are cautious about whether there will be a stagflation in Japan. Of course, from my personal point of view, I think Japanese economy will get better in next year.
Now, let's continue on to the economies in other parts of Asia. So, Nick-san, I know there are a lot of countries in the region. Where do you think are the winners and losers for next year? How do you look at the overall economy in the ASEAN region?
To be quite honest, I can see a lot more losers in 2015 than I can see winners. And I guess my highest conviction trades for 2015 would really be on the short side. We are in an environment of dramatically slower growth. As I said earlier, I think we're only in the first stages of the realization of quite how slow China could become. And that deflationary impulse is going to be increasingly felt in 2015. In that environment, I think an economy like Korea, which is extremely reliant upon China as its dominant trading partner, and with a very significant emerging markets customer base as well, and very, very high levels of domestic leverage and flat domestic consumption, a market which foreigners love because it's cheap, I think Korea could have a very rough time indeed. So I would want to be short just about everything in Korea. Hong Kong, we haven't alluded to the sort of political side effects of what's been going on in North Asia, but developments in Taiwan, from the point of view of Xi Jinping and the China dream, have been very worrying this year. And they have been echoed in Hong Kong with a level of civil disobedience which people said couldn't happen. They have managed to snuff this out, but it'll recur again. The point is that 20% of Hong Kong live below the poverty line. The Gini coefficient is absurdly stretched. It's almost like Africa. And Hong Kong real estate prices are priced to perfection. I think Hong Kong real estate is in the midst of what could be a pretty sharp decline as real rates rise and as China slows. So I'd want to be short all the property developers in Hong Kong. If I wanted to be a bit positive, we've already talked, you've referred to India, which is a clear beneficiary of lower oil prices. There's high single-man risk in President Modi, Prime Minister Modi, but I think you could see the Indian GDP rate accelerate by 200 or 300 basis points quite easily, and there are a lot of low-hanging fruit for Modi to pick. But much beyond that, I struggle. I think 2015 is going to be a pretty tough year.
Okay, thank you, Nick-san. Now, Ronald-san, Nick-san talked about Hong Kong. He's going to be short on Hong Kong.
Yes.
What's your opinion on that? You're from Hong Kong.
Yeah, from Hong Kong perspective, I think things in Hong Kong is actually a little bit overpriced. I have to agree with Nick-san on that. But somehow, because the Hong Kong market is closely linked with Chinese market, for the past few months, we've seen a very strange situation. Even though the economy of China has been doing not too well, but the Asia's market has been doing really well. So basically, have some rippling effect on Hong Kong. So basically, I think it will consolidate certain sectors in Hong Kong, especially the China concept. It will be doing fine. But of course, judging from the whole Southeast Asia point of view, I think Hong Kong will not be the winner. The winner will be other countries like India, Indonesia, or even Thailand, because they have been benefiting from the lower oil prices. They have been net importers of oil. So basically, all Asian ASEAN countries may be winner from my present perspective.
And Nakakubo-san, what do you think about Asian economy for 2015?
Mm-hmm. Currently we are bearish on emerging market as a whole. But I think there are some further divergences within Asia. And biggest performer, I think, in 2015 is India because of the Modinomics. That's an Indian version of Japan's Abenomics. He was able to perform structural reforms within India, and he was able to increase the inflation ratio and decrease the current account deficit, and at the same time he was able to get rid of bureaucracy.
Right. So I guess we all agreed that people should invest in India next year. Yes. Okay, Nick-san, Ronald-san, Nakakubo-san, thank you very much for your insight, and I hope you all come back again on our show next year. Happy holidays. Now, it's time for other stories making headlines around the region. We start with earnings results from China's biggest selling smartphone maker.
Xiaomi is a privately held firm. The company released financial results for the first time since setting up 4 years ago. Reported sales are impressive, $4.3 billion, but profit was just $56 million, a profit margin of a little over 1%. That's far lower than those of the two market leaders, Samsung and Apple. Xiaomi sells its handsets at low prices, helping to drive explosive growth in its home market. Last year, it became the world's third largest smartphone maker. HSBC reported another worrisome sign for China's slowing economy. The bank released its latest Purchasing Managers Index, which shows how the country's manufacturers are doing. The index stood at 49.5 in December. That was down from November's reading of 50, the cutoff line between expansion and contraction. This was the first slip into negative territory in 7 months. Officials say the sluggish manufacturing activity is the result of slowing domestic demand. The latest data points to a weak ending for China's economy this year. Thailand's central bank has decided to leave its key interest rate unchanged for the 6th straight session. The Bank of Thailand kept the rate at 2%. The central bank cut the rate in March down to the current level from 2.25%. That was before the military seized power in May. Some policymakers at the latest meeting demanded another cut, but most thought the rate was at the right level to ensure steady economic growth next year. Myanmar's government is pressing ahead with plans to open the country's first stock market. Officials have given the go-ahead to set up a company that will operate the Yangon Stock Exchange. Japan is backing the project. Officials from the two countries signed a cooperation agreement in 2012. The operator of the Tokyo Stock Exchange, the TSE, will provide know-how. A Myanmar state-run bank will hold a majority stake in the new bourse. The TSE will also hold shares. Officials say they want to get the exchange up and running by next autumn.
We've just got time for one more look ahead, a peek at next year's event calendar. In January, Chinese officials announced growth figures for the last 3 months of 2014. That will also show us if the government met its full-year target of 7.5% growth. In late January, policymakers at the Bank of Japan hold their first meeting of the year. Recent consumer prices have been coming in lower than expected. That's got people speculating about more easing measures from the central bank. In February, Japan's government comes out with figures for fourth quarter GDP. The economy contracted for 2 straight quarters after a sales tax increase in April. The same month, officials in New Delhi released GDP numbers for India's economy. In March, Communist Party delegates from across China gather in Beijing. One order of business is to announce China's growth target for 2015. That's all for this week on HBIZ Forecast and for 2014. We're taking a 2-week break. Our next broadcast is on the weekend of Saturday, January 10th. From me and from the rest of the team, thanks for watching. Have a great weekend and a wonderful new year.